Alan Nuckman is joining us, Chief Market Strategist at Agora Financial. So what's the deal here, Alan?
Whole lot of nothing. Trends are intact.
Not for bonds, man. They're rallying like crazy. Like he just said, we're cutting 3 times this year.
I haven't seen the updated numbers, but coming into today, there was less than a 50% chance they were going to cut one more time by July.
83% now.
So they've raised it. All right. So there's a higher likelihood. Now these things change, obviously, but we know coming into today that if you had to pick, if there was a gun to your head, you had to pick whether we're going to cut rates this year ahead of elections or not. I think most people would agree that policymakers are going to put their thumb on the scale and do what they can to boost this markets more. So this is not a question. You know, the question is how many more times can they do this? I know a lot of it is done indirectly.
You really want to bet that the Fed is in cahoots with the president and that we should get ready for a cut so that they help? I mean, come on.
Do you want to bet? Okay, the question I have to ask is you. Do you want to bet that they're not? Do you want to bet that they're not under pressure? You tell me that. Your boss tells you to do something. What do? You probably think...
You'd be surprised, Alan. I've gotten in trouble
Your own independent thought. Your own independent thought is probably going to lean to doing it anyways. But
do you want to prioritize it more so? The question here, because I know what you're saying, because I think it's the big story of the day here, right? Because there's something strange going on. You've got bonds about to reinvert, right, on the yield curve. They're rallying like crazy. Gold's loving it. Bitcoin's loving it. Stocks are okay. They're hanging on. But it seems like this market, even with good data lately, has just pivoted towards like chaos again.
We're 1% away from the all-time forever high, so you got to relax a little bit. There's opportunities here, and yes, the trends are very much intact long-term for bond prices, bond yields going down. That's the trend. Yeah, we had a bit of a bounce for a little while when things stabilized because the boat was so overloaded on one side it was going to tip over. But now it's the overall trends are still very much intact. Stocks up, VIX down, bond yields down. The gold trend after it broke out of that 1400 level, it traded between 1100 and 1400 for 5 years. So that targets 1700 on the upside. So all this is still in play. I don't see these changing anytime soon. And you can see what we should be talking about are earnings. These are great numbers.
I agree.
22 billion. 22 billion. That's the net income for the quarter. That's the biggest profit for a quarter in corporate world history.
Yeah.
That's for a quarter, pure profit. So,
I'm with you. So let's cut rates, baby.
Let's not be a non-believer.
No, I agree. The earnings are crushing it. Apple beats guidance. Intel says they can survive and they're thriving. We've got Facebook coming up. You know, if they show that people are still willing to spend and businesses are going to spend on services, then are you buying? I mean, bottom line here, Alan, is are you buying the dips even if these Fed cut odds drop? Because my view is the odds here that unless the data changes dramatically and gets worse, so the coronavirus takes off and our Chinese economy that's now connected to us just grinds to a halt, then okay, we cut rates maybe. But unless we get there, do you buy these dips? Do you get ready for more gains?
I think interest rates are a non-factor. We're at low rates. We are most likely only going to lower. I don't see them going up anytime, and I don't think anybody does. Now let's talk about the markets. Now it's about risk reward. It's about finding these opportunities. You saw Microsoft and Apple both sold off 5% off their highs, but people didn't step up and buy them. You know, people were still nervous. That's a healthy sign from a contrarian viewpoint. I'm looking at a couple S&P stocks. I went to the S&P 500 list, went through all the components. Actually, there's not 500 components. That's another story. But I looked for the worst 20 stocks in performance over the last 52 weeks.
Give me a couple before I let you go.
GPS, which is Gap Stores, it's trading between 16 and 20, so it's moved above the 18 midpoint, making a bottom there. Also, American Airlines, only 4% of its revenue come from Asia, so the airlines have gotten crushed. It's been trading between 24 and 32 with the 28 midpoint here. I'm looking at August options on there. These are some good risk-reward plays, buying in-the-money calls that are going to be good payoff if and when these stocks break out of these bottom bases here. But again, there's not a whole lot of risk on that kind of play at these levels. And that's what I'm looking for, and not jumping on the AMD or the Apple or the Facebook after these huge runs.
All right.
Probability. It's all about probability.
Alan Nuckman being a good TD Ameritrade Network guest and bringing it back to the trade. American Airlines looking for a bounce. And Gap too. Hey, if L Brands can do it, Gap sure as heck can do it. Alan Nuckman.
Exactly. That's the mentality.
All right.
I'll make a trader out of you.
Yeah, already there, Alan. All right. Well, profitable, that's a different question.